Good Fed day, everybody. Looking forward to reacting to the reaction from the Fed. Will the market be fed by the Fed? Or will the market go on a diet after the strong NFP number? We're going to see how the market handles it. I'm sure we'll get some good jawboning if there's a presser after that. So what a key line here, right here. Does everyone see this highlighted? And on the home page, learn more. Sometimes you think there's nothing else to learn. I'm telling you, this is the key to becoming good at this, at trading. We're always learning, growing, or we're dying. So who's ready to learn more that is not currently a subscriber to at least sign up for the trial today? Anyone out there that wants to learn more? And you know, it's not always completely about what you're learning, but who is teaching. Hi, Shahab. You guys admire Blake and what he's accomplished in his career? Learn more. Like Rega's wave count, his way of using Elliott waves, learn more. Stelios's macro views, the highest hit rate on the team, learn more. Steve, you get to learn from every day for free, your own face. It's pretty cool, huh? I have a friend, he says, if it's free, it's me. Anyone else like that out there? Addicted to free? I'll tell you what, I paid the price on many occasions to learn how to do this. It wasn't free. So you know what? You pay to learn and surround yourself with guys like Joe Perry and Paulie and Amanda in chat, or you pay the market. Either way, there's a tuition. Hopefully the tuition you pay to the market is for a community college and not for an Ivy League institution. That's my hope for everyone out there listening to me right now. So let's get to some free analysis. What do you think? Who's up for some? Okay. So starting off with the Dixie, it's trying to establish a higher low here. To me, looks like there is potential, and you know, we could probably throw our charts away for a little while with the Fed and the Fed meeting. It looks like we want to get perhaps another wave back towards the 97.90 level. If you're a dollar bear, I don't think you want to see it closing back over 98, because if that happens, we're going to threaten this again. Yesterday, I talked about a turnaround Tuesday trade alongside the yen. It was down here. It worked. All right. So the next move I'm looking for is some type of sell. I'd like to see, you know, the confluence up here of 50% retrace. And you see this little speed line here, a bit above 109. I'd like to see these stops taken out, right? This was 109. This was the NFP. This was the yen giving it all back. This is still some risk on and a question about yields, but I'm viewing this as a pretty big shorting opportunity, because eventually, I know there's a lot of fibs here, but closing back under 108.50, there's a lot of space to 7.5, and under that, there's a lot of room. So this is going to tie in with what I think is going to be one more shot down in yields. So we talked about it. Could we shoot up to 2 one more time? Better get going. And once we take out this uptrend line, historical lows and 10-year yields, I think, are in the cards. And then we could really become bond bears. So here's your historic low. It doesn't show it. Let me go to the monthly, and you'll see the bonds already took it out, but this was it right here. And so far we held it. It's my contention we get one more washout for one more low. And you know what? Maybe this will be a 1 in 2012, a 2 in 2016, and to complete the pattern, get some type of 3 down here. And then maybe we could be talking about what Steve talked about, where late cycle rates go up mainly because of supply and less demand, and a weaker dollar could be part of that scenario. You want to, negative rates with a depreciating currency is what people are doing in Europe. So we'll see if that travels over here. And let's see, the oil, I still, being patient with this, took it here, covered some here. Needed to start closing back under this low. Okay, under 57.80, it's going to look bad. Can we make another trip up? Sure. And wrap it with, keep an eye on this, the 15th, we have that. We already know that was the big news yesterday, that tariffs will not be increased, I believe. Not that we have a deal, but at least they're not going to exacerbate it. And here's the S&Ps. Let's see if the Fed could generate one more new high. One last thing is, when we were talking about S&Ps yesterday, we were down here. And I said, God, we could get a rally to 3140 because of the 2-week off number, which happened to be this high. I think it was 2 weeks ago we closed 3143.80. So sometimes these markets, these off numbers are like magnets for the market to attract it. So we'll see what happens by Friday. If we close under this 3143, that'll be your first 2-week reversal in quite some time. So, we're trying to get another pin bar here. And we know what's going to happen if we take out next week's low, if something disappoints the market. And don't forget, we have the elections. I don't know if, I think it's tomorrow. And, I think that the market's pretty sanguine. Oh, and I want to bring up one more thing. I sound like a kid. Oh, one more thing. Blake was talking about a potential low in EG, and look at this spike. I think we may have gotten back to this throwover line. And now we're giving it back. No, we didn't quite get there. It's at 74. So this is how I feel now. And yesterday I almost had FOMO and went for it. I just can't chase things, I never even chased women. How about you? You want to know how I got started?
Women chased after you.
Huh? No, someone's asking. Oh, David's saying that I did. Okay. Well, maybe once in a while. Anyway, back to EG. If we smash it one more time, 83.80, I'm going for it, because we'll have another divergence. And when you look at it, even on a shorter term time frame, we'll have another divergence. So even on the 1 hour, we've been diverging for a week. So I have a suspicion it might happen on the election, but I'm going to try it down here. We're 83.80-ish or so. Next low will not confirm. This was not a divergence. Steve, why? Why was this low not a divergence?
Is that a test?
Huh?
Is that a test?
Yeah. Why isn't it a divergence?
Because it wasn't a lower low.
That's right. Oh, Steve, you get the gold star. And Steve, I brought in, there's going to be a guest today that is a very big proponent of Bitcoin. And he too says he's, schooled in the Austrian School of Economics, which a lot of your philosophy is based upon, correct?
Yeah, that is very correct. And
Okay.
he's not the only one, to be honest. I remind you that we
Yusko?
had a drink with Mark Yusko, and he's more or less of the same philosophy.
Oh, okay.
Uh,
Well, anyway,
it's just a matter of perspective, because a lot of cryptocurrency believers do correctly believe that there is a huge problem with fiat currencies, the way monetary
right.
policy is working. So liking them or not is subjective on a second element, which is, do you actually believe that a cryptocurrency can act as
Save
something
it.
more tangible, as something more real, as something that can
Oh,
actually hold value? So the
right.
big question lies there, not about if there
It
is big.
hasn't. It hasn't passed the test of time,
That's
like
one
precious
element.
metals are.
That's one
Okay.
element. It
All
hasn't
right. Well,
passed
save the
the test
rest
of
for
time. Yeah.
Bruce. Okay. He's been everywhere. I mean, he's been interviewed everywhere. All the major media outlets, CNBC, Wall Street Journal, everywhere. So it should be an interesting interview. And he actually has a way, if you're interested in crypto, for you to do your due diligence and break it down. He has an acronym. So stay tuned for that. And I now bring on Pipzar, who, is one of the nicest czars you'll ever meet. Normally, they're kind of dictatorial, and Blake really isn't,
Did you?
even though people
Is
think.
this kind of a
Huh?
kind of a Richard? Is that what you're going to say?
No, no.
Okay.
No, you're not dictatorial for a Pipzar.
Well, good morning, and
Hey, buddy.
hey. So let's stop for a moment and let's talk about a few things. First and foremost, just very low volatility environment still in the markets. This is going to be my first losing quarter in a few years, more than likely, unless something changes dramatically over the next week, which is entirely possible with the UK, elections coming on Thursday, and then with the tariffs on December 15th. But this has been a very, very tough quarter, and one of the reasons why is the lack of volatility that we're seeing in the markets. But that doesn't mean that we're not going to see volatility pick up. I think actually this next year is going to be probably one of the bigger volatility spikes that we're going to see in the FX market. So this is the time, especially if you're not using ForexAnalytix, as we have our beginning of the year offer to coming in the next few weeks. That's our big annual offer. You guys are going to want to take advantage of it because you're going to want to make sure that you're in front of the have good analysis, updated analysis intraday when it releases. So I wanted to state that because this has been just a very, very tight FX volatility environment, and we're probably going to be seeing some pretty big moves come the next into the next year. So with that being said, let's keep a real close eye on like the euro dollar. I think the euro dollar around this 111 level is going to be really big. We have the Fed today. The Fed is not expected to move on rates. It is a situation where the Fed may stand pat, but how they move their dot plots might actually have a little bit of an influence on the dollar. But there's a lot of talk going into this the next couple of weeks. There's a big article that came out from this analyst about repo funding rates and about the Fed might have a bit of a funding problem going into year end, which might create a lot of volatility in the markets. And this piece has been making it's a former Fed analyst over at the Fed who joined the private private sector, and since then has made a little bit of ripple in the market. And so everybody's watching very carefully the Fed today, because any type of misstep by the Fed and what they propose from a repo funding mechanism might actually catch the market a little off guard. And to be frank with you guys, I'm going to be watching price action, because as you can see, we have a very, very tight trading range. If I had to guess at the euro right now, we're probably looking something like this, and actually I'm going to redraw this. Probably something that looks more like this in the euro, where we might see dips down to 110.50 as being buying opportunities, and moves back up to 110.90 as being selling opportunities. But be aware that I think that this consolidation that you're seeing here today might actually see a breakout soon. So and it could be as early as today. But more importantly, we have the UK elections that are coming up into the next couple of days. Which, by the way, the pound came under a little bit of pressure, but while we're above 131, this is just a consolidation, and the market is pretty hopeful that we will continue to see. The Boris Johnson and the Tory party continue to make headway. The conservatives still look like that they've got a good marginal lead, and Labor still with Jeremy Corbyn still lacking right now. So as long as those polls, they're not gonna give us too much more indication. I think that the cable is going to start getting a little volatile going here in the next 24 hours as we go into the final stretch. There are indications that the exit polls are going to be around 5 p.m. Eastern, which that's going to be around 11 o'clock UK time. I think counting is going to go well into Friday morning in the UK. And so those of us in the United States are probably going to be up pretty late. I'm going to be in the chat room, in the ForexAnalytix chat room. If you guys don't know how to get there, if you're ForexAnalytix subscribers, you click on this little button right here. Takes you over to the chat room that looks like this. And Benedict, yes, I was talking about Zoltan. That is correct. But once you're in the chat room, that's where you're going to find me tomorrow during the UK, elections, as we're listening to the polls. And I'm gonna tell you guys right now, I plan on not having any pound positions going into the election. We were talking, just yesterday in the chat room before that final poll came out, the YouGov poll. Dale had mentioned about the really key support here at the 84 pence level, and I told the folks in the chat room yesterday, I'm like, if you're going to buy anything, the euro pound looks like it's the one that's going to bounce, and it did, but it's already softened right now. Now we have this like inverted head and shoulder pattern that's developing, and we need to break above 87 or 84.70 in order to be bullish. And frankly, I think what's possible over the next 10 hours or so, 10, 12 hours, is a bounce back up towards the neckline. But I wouldn't get too carried away with with the euro pound, not ahead of tomorrow night. So if you guys miss that move, then you're probably going to be, just dealing with a near-term consolidation as we try to develop this shoulder. Just also keep in mind regarding this like pattern, it's not bullish until we're back above, let's just call it 84.75.
Nice look.
Yeah, I mean, we'll see, Dale, if it'll turn into anything. But like I said, I would be very hesitant about getting too, at this stage in the game, about getting too directional in the market.
You see that blue RSI line there, Blake? I'd love to see one more washout and have a divergence that holds well above, much higher. I think if we get a new low, it won't even get down below 30, and that's the one I'm looking to play.
Okay.
See what I mean?
Yeah,
because it's been diverging since the beginning of the month.
Didn't mean to do that.
Yeah.
I see what you're talking about.
Yeah.
And like I said, if you missed it yesterday, I was about ready to sneeze. If you missed it yesterday, then I don't know if there's really anything to do right at this point in time, especially ahead of the FOMC, ahead of we do have inflation data coming out in about 10 minutes, but more importantly, in front of the elections, you just got to be a little cautious here. Now, we were having a conversation in the chat room, and I want to see if Stelios is here because he was talking about. We were having an inflation conversation a little earlier in the chat room, and he was talking about how the quantitative easing by the Fed has really caused more of deflationary pressures versus inflation. I want to see if Stelios is here, and
I am here. Good morning.
Hey, Stel. So
Hey.
good morning. Now
Yeah.
you talked about QE as being more deflationary than inflationary, and that is not what conventional wisdom would say. So what is your argument here regarding quantitative easing and possibly the deflationary pressures that it is put on? And then let me also ask you this, that we're basically we can call it whatever we want, but the Fed is continuing to expand its balance sheet. People will call it QE4, even though the Fed's reluctant to call it that. What are the effects of this continued expansion of the Fed balance sheet and what it's doing to inflationary pressures?
Yeah, well, I know it sounds controversial. Good morning, everybody. I was having this conversation with some friends months ago. They're not traders, but they are quite financially literate. And I said to them, "Oh, I think QE is deflation." They both went, "What the hell are you talking about?" I said, "Look, I didn't say the increase in money supply is deflation. That is inflationary, of course. But the way they are giving us QE, or they have been giving us QE all these years, in my opinion, is deflationary, and it is because." What are they doing? They're buying assets. They're buying bonds, basically, or other central banks are buying equities or equity ETFs, like Japan or the S&P is buying equities directly. So what are they doing? They're doing this, and they're hoping for the trickle-down effect, which is what they've called it, to take place. I think an inflationary way of doing an equivalent of QE would be to do helicopter money, right? Deposit, $10,000 in everybody's account. That's inflationary straight away. But what they're doing is they're buying bonds and equities, and they're buying bonds and equities, like I said. And basically, what does that do? I don't want to say they're top 1%, but the more wealthy people, they have basically the lower rates, okay, and they're buying equities and bonds. So the wealthier people, they have now very low interest rates. So that basically gives them the opportunity and the incentive to take risk. So what do? They start buying houses, they start buying cars and wines and all these things that they can do. So what happens, and we've seen this, right? The housing market last 10 years since the crisis, everywhere, it's gone up massively. So what's the result of that for the average person? Well, if the average house price is going up, then the average rent is going to go up. And if, all these assets, the way they're inflating, the QE is inflating all these bubbles, that means that things like housing becomes much more expensive. Things like education, look at university degree, costs for a degree in the US. It's gone up, what, 5 times in the last 10 years or 20 years? Ridiculous.
Yeah.
So for the average person, if they're seeing their cost of housing, of education, of healthcare going up, that means that their disposable income reduces. And that's the problem I see, because with QE, you have all these bubbles being blown, except the average Joe's account, right? So you see that they see their disposable income, the net disposable income, decrease after these expenditures, which are, let's face it, they are mandatory. They have to make them. They can't live on the street.
Let's call them unelastic, yes.
Exactly, and they have to make it. They can't live on the street, or they can't say, well, I'm not going to send my kids to school. So when that happens, they have less money to spend on things. And that's why I think we're seeing deflation, or we're not seeing the inflation that we really should be seeing if trillions upon trillions of credit and, and money supply was being plowed into the system. That's my view about QE. Yeah, and
so
that's why QE is wrong.
That makes a lot of sense, because we're not getting the trickle down effect. However, how do we reverse course of that, or what reverses course of that?
Well, that's a good question, because now the damage is being done, right? The only way average Joe can start to afford more things is for either things to become cheaper, which I don't see how they're going to become cheaper. I don't see how housing, actually I do. If interest rates go to the moon, then housing is going to drop. But there's 2 ways. Either these things start costing less, so people have, with the income they have, the disposable income, they can afford more stuff, or the income of the average Joe has to increase. So, and you've seen the charts, right? On the last, last 20, 30 years, you see how inflation has gone up and how the average pay has actually stayed the same, or roughly the same.
Has stayed the same, yes. I think like 20 years ago, it was like 40, the average income was like 47, 48,000, and it's exactly the same, like 1,000 difference.
And think about
nowadays.
What $47,000 bought you in 1990s and what they buy you now. It's not even close. So
right.
One of these
the invisible depression. There's also one other aspect called financial repression, where you used to have savers, right? And you used to get a decent rate. So people that normally would be a saver, which would generate more income for them to be a patriotic American and spend every buck that they have, that's been gone for years. So people that aren't sophisticated in the market or don't gravitate towards ETFs or mutual funds, they've just gotten nothing on their money for 5-10 years now.
Yeah, and all these people, all these savers, people have pensions. With these rates at 0 or near 0, they're being robbed. Well, I don't want to say robbed, but basically their buying power is reducing every single year. People who have cash, it's been reducing.
And now they have to buy things like Beyond Meat.
Yeah. So
you know what I mean?
Yeah. So let's get this straight, because I think people got confused. Monetary policy is hugely inflationary, but 2 of its effects, you mentioned one, do tend to pressure lower the possible repercussions of inflation, because I remind you that until recently the definition of inflation was the expansion of monetary supply. So first of all, we do have inflation. Now the question is, why isn't it that obvious in all the prices? And the answer is, some prices are not going up because exactly of what you just mentioned, Stelio. And there is also a second phenomenon, which is the following.
Wait, hold on, Steve. Wait, Steve. Can you hold on to the second phenomenon?
Yeah, we have data.
We have data.
Data.
We have just inflation data coming out.
Speaking of inflation, we have inflation data.
Yeah, exactly. And it's a good segue. And I'll stick around for that, because I'm not doing anything ahead of the FOMC anyway. But watch this dollar yen. And by the way, the dollar yen, if you guys haven't seen it, this is a really tight channel. So only below 108.40. It would get a little bit bearish, but I doubt we're going to see that today. Even if we miss on inflationary data, we might get a dip. We might get a dip towards the 50s, but you're not going to see any big move here. So stand by. Here's Bloomberg, so you guys can see how quickly it comes out. Oops, there it is. Basically the same. Yeah.
2.1 year on year.
Yeah, I mean, it's firmed up the dollar just a little bit, but not much. I mean, it's really pretty much the same here. So,
Core CPI remains above the target, theoretically speaking, and the Fed isn't even interested about that.
yeah, right, exactly. Anyway, I'm sorry, Steve. Since the data's out of the way, now go to your second point before I turn it over to you, because I want to hear this.
So the second, one secondary precaution of financial repression and monetary policy is what Austrians call malinvestments. So a lot of investments that wouldn't have been possible in the past are being possible simply because there are people that don't have what to do with their money. So they're just throwing it at companies that aren't even certain that they're going to make a profit. The thing is that those exact companies are trying to build a name for themselves and build a customer base and build up their valuations by offering products to people at a lower price than capitalism would allow. Let's get the example of Uber, for example, or Lyft. Those are both companies that offer services to people, obviously at a lower price than they should. How do we know that? They keep making losses. So you have a lot of companies that are trying to grab a market share without caring to ever make a profit, which means that they're offering a product without a profit, actually by taking losses, just because they know that there are investors out there that want to play in the Ponzi scheme, which is, I know that you're loss making, so I'm buying you because I believe that I'm going to be able to sell your stock at a second person later on at a higher price, at a higher valuation.
Yeah.
Just because of that. So we do have also the effect that we do get to benefit from services and some products that are actually being offered to us at a lower price than what a healthy economy would dictate, because a healthy economy would not allow to loss-making companies to keep existing.
Thanks to Amazon. I mean, right?
Yeah.
I mean,
Amazon, by the way,
for many years.
Amazon, by the way, Blake, is an excellent example of a successful business that followed this model, because we have a lot of companies that will fail. Amazon was lucky enough to start booming in the beginning of this business cycle, which is the longest business cycle we ever had. So Amazon had actually the opportunity within the same business cycle, just because it was very long, to go from the business model of just trying to grab market share by being loss-making to actually making it being profitable. So Amazon is going to survive that, but a lot of the rest of the companies that have been following this model are not. As we saw in 1999, 2000, with all those companies that had some crazy valuations, and the only reason people were bidding them up is because they were indoctrinated in the whole idea that, yeah, I know it's expensive, but somebody else is going to buy it more expensive from me.
Yep, it's the same phenomenon we're seeing when it's all these these industry quote unquote disruptors that are loss leaders. That we have one of them here in Arizona called Carvana. I don't know if you've ever heard of it, where they have these towers of cars. It's almost like a vending machine for cars. And I was talking to one of the guys that helps manage the parent company of Carvana, and they're like, well, they know it's a loss leader. They know that it doesn't make any money, but that's not the point. I'm like, well, what is the point? What is the point then? And I don't know if you've ever heard of Carvana.
No, I haven't.
I've seen them either.
Gosh, let me just show you Carvana. I drive by one once a week when I take my kids to one of their events. They're like
tower.
This. It's like a tower with you go online, you buy the car, and it spits it out like a piece of gumball.
Is that used cars or new cars?
They're used cars.
Okay, cool.
isn't it?
Oh, it's great in theory. You go online and you select the car you want, but anyway, I don't know. Okay, well, hey guys, again, this is a very quiet market. Be very careful. I'm going to reiterate. For me, this is like my first quarter in years that I've not been able to turn a profit personally. So, and that is something that, you know, for somebody who's been doing this for over 20 years, you know, I can't say that I've never had a losing quarter. That would be untrue. But this is one that is, you know, it's a period of low volatility. So when there's a period of low volatility, it's easy to get yourself in trouble, hard to get yourself out of trouble when the market's not moving. So you got to be very selective in your, you know, in the trades that you take. And that's, you know, I want to point that out because I don't want you guys, you know, running out just chasing the market all over the place, because you're going to end up getting yourself in trouble. And because the lack of volatility, it makes it very tough for you to make it back if the market's not moving. You know, you get these little sudden bursts and you have to be either on the right side or, you know, cut your losses quick. So this is a really important time to be doing so. Another thing I want to state is that with the UK elections tomorrow, things are going to probably get a little bit more volatile with the December 15th tariffs set to expire, but probably going to be pushed off over the weekend. You know, just be careful. So I'm going to pass it over to you guys and everybody.
Thanks,
yep, thank you, and I'll see you in tomorrow.
Thank you, Blake.
All right. Good luck today, Blake.
Thanks.
Okay. First of all,
Hey, you know, guys, before you start, who does that? Comes out and says, I had a losing quarter. Okay, so, you know, that's the
Somebody that is,
attraction.
first of
That's
all,
the
honest.
Steve says that to me every quarter. No, I'm just kidding.
well,
Yes,
okay.
yeah.
But anyway, I mean, you know, people will admit to, you know, it's wrong on a trade, but, you know, the authenticity is what separates us, I believe, from, you know, a lot of people that don't talk about the reality of the business, that you could be a very talented trader and go through drawdowns. And, you know, I think it's good that people know that even professionals that have been making money, making a living off the market for a long time, go through periods like this. So, you know, I tip my hat to Blake.
Yeah, absolutely. And the easiest thing to do is make all those ridiculous like advertisements with guys with Lamborghinis.
Or they're revisionists. It's like they never even you know they
yeah.
You know what I mean?
Yeah, and jets and everything else. And but the hard reality is that even the best will have drawdowns. There is no question about it. And you know something, it's all about being, you know, honest. It's all about being confident as well, because you know it's much easier if you're confident and you know that you're good in what you do to say, I had a bad quarter. People that are not confident in themselves won't say that, you know what I mean? Because deep down they're afraid that this is not the exception. But when you know that, you know, year over year for decades, you make money off the markets, you know, you don't feel any, you know, you don't feel bad, or you don't feel, you know, any regrets to say that, okay, I had a bad quarter, so what, you know?
No, you're thinking next quarter, next week, next day, next trade.
It's all about statistics. When you've proven for 20 years that you can make money off the markets, you know, that won't change just because one quarter was bad. End of story. I mean, you know.
Yeah.
Okay. All right, go ahead.
Any thoughts on Zoltan Porsar prediction that Fed will start QE4 by end of the year? What do you mean? QE4 has started like
with the
2 months
repo
ago.
Market.
It's called repo 4.
I mean, the Fed has already undone what it took like a year of quantitative tightening almost in 2 months, like more than half of it. So if you remember, Jason, because I know that you're a frequent listener, I said in advance that once they start quantitative easing, they're not going to name it quantitative easing, as they initially didn't name it debt monetization, because debt monetization was forbidden. So they decided to give it a different name. And then I said in advance that now quantitative easing is tainted as a term because they used it when they admitted that conditions were extreme, right? So if they name it again quantitative easing, then it's like admitting that we're back more or less in the same financial situation we were in the dip of the financial crisis. Bills are sterilized. They're not injecting cash. That's not actually right, because it doesn't matter what kind of paper you buy. I mean, it doesn't matter if you buy bills. It doesn't matter. Yeah, I know what you're talking about, but it doesn't really matter what you're buying, because the question is the following. Are they going to let them mature and not roll them over? The answer is no. Even if they end up buying like 1 day bills, they will roll them over the next day, and they will roll them over the day after that again and again. So yes, there is a difference in duration in this case, for those that know what duration means in finance. So yeah, there is a big difference in duration, but don't expect them to actually stop doing what they're doing. And so if what you're talking about is duration, meaning that they're going to officially go in buying longer term debt, so if that's what you're referring to QE4, yes, I also do believe that they're going to end up buying. Yes, now I get exactly what the question was. Yes, I also believe that sooner rather than later. I don't know if it's going to be by the end of the year, because it's just like 20 days left. But I do believe that within a few months, they will also be officially buying longer term debt as well. I have no question in my mind about it. As I was saying at the end of last year, that the expectations that we're going to get 4 rate hikes this year was, preposterous. There was no chance, and that the next, move from the Fed would probably be to cut. I'm telling you, I'm 100% sure that the next move is going to be cutting further and doing more quantitative easing by buying longer term maturities as well. Yes, absolutely. Yeah, thank you. I mean, now that I understood exactly what you were asking for, because so you were referring to the duration of the bonds they're buying. Yeah, absolutely. So, the Fed, in essence, has admitted full failure, because the only way they excused quantitative easing initially in front of Congress was by saying that it's not debt monetization, because it would be debt monetization if they didn't intend to completely reverse this policy once the financial crisis was over. So now we know that the financial crisis ended like 10 years ago. We're headed towards the next one, and they never managed to normalize the balance sheet. So we know that their policies failed. And the fun part is that they were actually celebrating success by doing the easy part, which was inflating the balance sheet, when if you actually want to celebrate success in quantitative easing, you can only do so after you inflate the balance sheet and you prove that you have the method and the exit strategy to actually revert that. Now, they proved that they never had an exit strategy, simply because with the way they conduct monetary policy, instead of making it harder for governments to be fiscally irresponsible, they make it easier for governments to be fiscally irresponsible, which makes it even more important to keep rates low. I mean, just to give you an idea, the projections, the US government projections are that, and Gunlag has spoken about it, is that the cost from the US government to service the debt is going to increase within the next like 20 years from 1.5% of GDP to 3% of GDP. Now, the fun part in that is the following. This, in the next 10 years, sorry, this assumption takes into account some economic predictions which include no recession during that period. So the prediction that the cost of servicing the debt is going to go up from 1.5% to 3%, which is doubling, takes into account that this business cycle will not finish for another 10 years. So we're going to have, let's say, a 22-year business cycle when the second longest one would have been 10 years. So as you understand, this prediction is ridiculous on its own because in essence, it abolishes business cycles. And second of all, it, for some reason, takes as granted that monetary policy is going to manage to forever keep rates at zero indefinitely, and the markets will keep ignoring all the signs out there and they will keep paying negative rates or whatever. And you know something that we didn't mention before we go to analysis, because actually we have very few things to show in analysis. If there is one thing more ridiculous than valuation in some of the loss-making company stocks, is negative yielding bonds. Because, for example, as we mentioned before, there are a few companies that will take advantage of this Ponzi scheme economy and will actually manage to make it to making a profit. Amazon is a great example of that. Some of them will succeed. So at least you can buy those stocks and have a chance to make some money or a lot of money. Have a chance, okay? I don't know how high that chance is. In my opinion, at current valuations, very low, but there is a chance. Now, there is a difference with negative yielding bonds. In the duration until it matures of a negative yielding bond, one thing is certain. There is going to be losing of money. I mean, the bond can change hands multiple times. And some of the people that will be selling it might end up making money, right? Because you might end up buying it at X price and sell it at X plus something price, and you are going to be making money. But net effect is that since it's negative yielding, at the end of the day, let's say it's a 20-year bond, at the end of the day, no matter how many times this bond has shifted hands, at the end of the time, when it matures, the net effect will be that people will have lost money from that bond, and that is a 100% certainty. So imagine how outrageous it is that credit, which, I mean, credit has embedded a risk factor, right? It has, theoretically speaking, I mean, sound economics tell us that you pay an interest for two reasons. One, it's the time value of money, right? Because there is even a saying in Greece, which means it's better to have money now than have money in the future, because who knows what happens in the future, like inflation or whatever. And the second risk embedded is credit risk. How do you know that a company you give your money today is going to exist in 20 years from now? Just think of the example of huge enterprises like Nokia. I mean, 15 years ago, everybody thought that Nokia is going to be like the #1 mobile phone company in eternity. And like 5 years later, it kept restructuring itself to just survive. Think of Kodak. It was like the best. I mean, it was like a 100-year company, like innovative in photography, like for a century. And now they're selling off their patents to just manage to stay afloat and end up getting bankrupt, etc., etc. Not to even mention inflation, right? So,
did you have one of those Polaroid cameras, Steve?
Polaroid cameras? Yes, of course I did. As a
Where
kid,
you didn't
yes.
have to bring the film in to develop
Yeah,
it?
yeah. I did.
I know
And
why you had one.
Yeah, because they gifted it to me.
All right. Anyway.
I was very young. When I had one. I was like,
oh, I know what you used it for later. Anyway,
it was
so
like in the late 80s or something like that.
yeah. I think that's that was a prehistoric form of sexting.
No. I was too young. Never used it like that. Trust me.
Oh, sure. Okay. Anyway, so I had one. All right, go ahead, man.
Okay, so few things have moved since yesterday, but as Blake said, I think quite a few things are going to move in the days that follow this week. But one of the things that did move, and I do like this reversal, is the Aussie Kiwi. because the Aussie Kiwi, and if you remember, Coach, we mentioned it yesterday as well, because the Aussie Kiwi first took out this channel by a little bit. It tested this support zone on the 78.6, and look at today's candle. It's an outside white candle, a very nice reversal candlestick. So I have to say that, and it's also an extra benefit with this pair, is that it doesn't get you in trouble with anything that might happen with the Fed today, with the UK elections tomorrow. I mean, you don't care about that, because no matter what happens to the pound, that's not going to move the Aussie Kiwi. No matter what the Fed says, it's not going to move the Aussie Kiwi. So it's purely a nice, safer, let's say, play. Technically speaking, a very beautiful reversal. I want to see how it's going to close the day. It was extremely oversold, so I think like we can easily see a rebound towards 105, 1053, and then we can move lower from there. But I do like the reversal today. So this is one candidate to trade that you can, consider doing without, as I said, getting yourself in trouble ahead of the risk events that we have in the days to follow. So I wanted to start from that. Now, let me go through your questions, by the way, to see if I have a couple of things also to show, but let me open the chat box and see. Okay. There you go. Gold.
Nice look and nice idea, Steve. See, pros always look for ways to insulate themselves from risk. Steve gave you a pair that won't matter what happens with the Fed today or the election. Maybe a general move in the dollar, but a very nice thing to think about on a day where everyone's concerned about news. Steve, them really nice. I like that trade.
Indeed. Do you guys have a verified track record? We have all our patterns in play posted on our site. They go live, and when they close, they go here. This is what we've done. Or you can see up here what we've done in 3.5 years. So we've had like 794 patterns in play with a 213.43% return, and you can see all the rest. So yes, we do have a verified track record of the patterns in play that we issue. Gold, palladium, we're going to have a look at all of that. This greater full economy, yes, absolutely, that's what it is. Okay, so let's start with them. So first of all, we did have, I don't know if you saw it, Coach, we did have the IPO of the Saudi Aramco, and it actually opened 10% higher than the IPO price. So now that that is off the way, as we've said, perhaps now it's time we can see crude rolling over. Crude is still holding within this channel, so nothing has changed in what we've been saying. I do believe that as long as we stay below this trend line, the path of least resistance remains lower. Now, having to do with the metals, I'll start from the palladium question.
I heard it was oversubscribed too, 4-1. So a lot of people wanted this deal, and that its market cap is bigger than all the other oil companies out there, publicly traded, combined.
I haven't checked out that fact, but it wouldn't surprise me, to be honest. So it doesn't sound too weird to me. So a friend here had the question, palladium, where does it stop? And the answer is we've already said that. When we broke through this cap and handle formation, we said that there are two targets to watch here. One of them is, and the most obvious one is the implied target of the cap and handle formation, which points to 1940. So we're not that far away from it. And since the recent pullback, we also have the 161.8% extension of this recent pullback, which we're almost there. It's like at 1958. So like, what is it? Like $5.5 above where we are. So I would start being very careful here, right? There's no question that Palladium is bullish. I think today is something like the 13th consecutive up day. So it's like overdone in any way you can, look at it. But I would start being careful here because we're approaching the 161.8 and we're getting quite close to the cup and handle formation as well. So I think that it might not take long for us to see some pullback. Now, having to do with the metals, I remind you that like at the beginning of the week, I said that one of the metals that has actually, made a move is copper. And as you see, copper is continuing higher. So I do believe that this is a legitimate break, and I do believe that we're headed to 284. So copper has broken out, and that might help in the process Aussie and Kiwi. We're going to have a look at them as well. Now, another one to watch is platinum. Why? Because platinum has been coiling after building a base here at 775. It has now been coiling between this ascending trend line support and, most importantly, this descending trend line resistance. You can see that this is an important resistance trend line because dates all the way back to the summer of 2011, right? So we're talking about an 8.5-year-old trend line. So I also think that platinum looks quite interesting here. Now, if you want to be more careful, you can leave some space and say, okay, I want to see a higher high. So let's say a move above like 957 or so. But I do think that if platinum starts breaking down after such a huge bearish trend that it had, and after such a long period of underperformance against gold, for example, there is a decent possibility that we're going to see finally some bullish price action coming through in this market as well. So I'm paying close attention to platinum for that exact reason. Now, going back to the more popular ones, which is obviously silver and gold. This is the formation I'm watching here in silver, this descending triangle. Also, the more the days pass, we also have the 61.8% fib and the 200 daily moving average converging to the trend line of that triangle. All of them roughly at 1632. So that's an interesting level in silver. To be honest, it doesn't yet seem to have reversed. I mean, price action doesn't show anything bullish in the short term, but I do believe that this was a legitimate breakout here. So I do remain bullish in the medium to long term. Just I haven't seen the signs yet to be bullish in the short term. Same here with gold. I mean, is it possible that gold has already bottomed here at 1447? Yes, it is. But what kind of confidence do you have on that? In my opinion, low. It's not unlikely to see another push lower before higher. So for me, it's all about this 1485 resistance area. If we make it through 1485, I honestly believe that gold is going to move a lot higher. So I'd rather be patient and buy the breakout than try to assume that perhaps we have bottomed here and then see that we have another like 20-30 bucks of downside, right? So that's what I think about gold, silver, and the rest of the metals. I do think we covered every single one of the most popular ones. Now, we talked about the Aussie and the Kiwi, so let's have a brief look at both of them and the Aussie yen that our friend is asking for here. So here is the Aussie, quite a nice up day today, but I remind you, the key level to watch, the key trend line to watch in Aussie versus the US dollar is this channel's resistance, which is also more or less in the same area with the 200 daily moving average. And just above, we also find this previous high in the 61.8. So, if you want to play it safe, let's say 69.30 is the level to watch. I think that if we close above 69.30, the Aussie is going to squeeze higher against the US, as the Kiwi did once it finally managed to break through the neckline of this inverted head and shoulders formation. And now having to do with the Aussie against the yen that you asked about, the day before yesterday, it was looking like it would break down from here. Yesterday, it had an indecision day. Today, we have an up day. So as you see, price action is very mixed here. I mean, it doesn't look bullish to me in any way. I mean, this price action doesn't look bullish, but on the other hand, it refuses to break down, right? So if you want to play it safe, as you see, we've already placed here like a price alert below these lows. I think if you want to play it safe, wait for a move below 73.40. I think if that happens, then probably the Aussie yen is going a lot lower, probably to retest the 70.50 low. Now, of course, you know, a big question mark to this is what's going to happen with the USD against the yen. And as I've said, this pair is like it has, in essence, gone in hibernation. So who the hell knows? As long as it remains trapped below between 108 and 109.50, I mean, it's like
the devil knows, man.
Yeah, I mean, it's probably more interesting watching grass grow or paint dry than
My gosh, you know what? That's FX hell. So
yeah.
if you're not a good person for
Yeah.
eternity, you have to trade the yen.
Yeah.
Now that's a punishment, huh?
Indeed it is.
You better be a good boy.
Yeah, otherwise
And everyone
I'm
out there, you better not shout.
Yeah.
You better not cry.
If you want to trade the USD yen, go down to a 1 minute chart, to a 5 minute chart, I don't know,
man.
yeah, tick chart, something like that, yes. And
Make
use
your
like
broker rich.
100 times leverage or
1,000 to
something.
1.
Yeah.
Use max leverage.
Yeah.
Anyway, nice wrap up. Let's see if we have a guest today, Steve. Bruce Fenton, please come on to the stage. The concert's about to begin if you're here. Bruce Fenton going once, raise your hand.
Okay, I'm going to cover Hero Kiwi since we had a question, as long as you're looking for our guest. So Hero Kiwi, very beautiful rebound from this trend line. I mentioned that we had drawn that on the chart that, you know, this was in essence a decision area for the pair. You can see the symmetrical triangle. We got a nice rebound from that trend line. Having said that, it still looks heavy. So if we do breach this 168 previous low, which is also going to breach the triangle's trend line support, I think that we're headed lower. Okay, so Euro Kiwi, you can be long against that level because the risk reward is decent, very decent. But in my opinion, don't be long if we actually break through that, because I think that the market can end up moving very fast against you in that case. Copper definitely had an effect on Aussie today. Yep. Aramco looking for Asian listing. We'll need to keep oil prices bid. Yeah, for today, yes, absolutely, I agree with you. And in general, I mean, for a few days, but the thing is that crude doesn't seem to be really supported. I mean, this price action looks very, very heavy. I mean, we've had a rebound that is lacking momentum completely. So I don't know. It feels to me like the next big move in crude is more likely lower than higher. I mean, that's how I interpret the chart. So do we have a guest, Coach?
Can you believe this? You know, in this brave new world we live in, I found out that Bruce Fenton is really a hologram. You know, these crypto people, you know, he's just, he doesn't exist. He's a hologram. So I don't know. Bruce, are you here? Look, there he is. Oh my gosh, we have a hologram live. So, okay, Bruce is here. And see, I'm going to promote you, Bruce. Bruce is a pro.
Okay, here
Been
he is.
interviewed. He's been interviewed everywhere. So, Bruce, are you going to be doing some screen sharing here?
First of all, let's hear his microphone working. I
Yeah.
see he's unmuted.
He's unmuted.
We
He
can't
checked
hear
in a
you.
little late. Can't hear you yet.
Make sure you've from audio settings. Make sure you've next to the mute button there is like a little arrow which opens like the audio settings. Make sure you've selected the correct microphone that you want to use if you have more than one. But you are unmuted from our side.
Can you hear me now?
Yes.
Yes, Bruce.
Now we can hear you. Now
And
we
now
don't
we can't.
anymore. Yeah, but we did hear you briefly.
Yeah.
Can you hear me now?
Yes.
Yep.
Yes.
Okay. Yeah, I just wasn't talking. I'm just looking for that to make sure it's on the right mic.
Yes, it is. It is. We can hear you just fine. And now,
Okay.
if you use the green button that says "Share," you can also choose a screen or a window to share with us.
Okay.
If you want to, Bruce. Otherwise,
course.
I have your website up here.
Okay. Yeah, I wasn't planning on sharing anything. So
Okay. Well, then I'll share while we're talking.
Great.
Okay. So, Bruce, it's really a pleasure to meet you. Thank you for
You
coming
too.
in today.
thank
Pleasure
you.
to meet you as well. Dale made an introduction saying that you're a big believer in Bitcoin. You probably know Mark Yusko then, right?
Sure.
Yeah, we had a drink with him the other day. I like Mark very much. He's a very nice guy. He made some nice arguments about Bitcoin. To be honest, I'm extremely skeptical about cryptocurrencies because I don't see yet what is the difference between existing cryptocurrencies and fiat money. I mean, in my opinion, so far we have like fiat cryptocurrencies. I mean, I would be all for a cryptocurrency backed by gold or by something tangible. And I'm open-minded, so I'm looking forward to listening to your interview with Dale.
Great.
Yeah, because
That's a-
Bruce,
that's a great question.
maybe you could tell us a little bit about your journey and your background, because I know you were a principal of a financial services firm, correct?
Yes.
So, I mean, you started on the conventional road and, built your own broker dealer. And so you've been in the business during the Baton Death March. Let me ask you, and you still have an interest in that broker dealer, Atlantic? What's the name of
Well,
it, Bruce?
So Atlantic Financial was an office of a broker dealer that operated for a
Oh, I
while,
see.
and then kind of became a little less active when I got into crypto. But we actually acquired a new broker dealer called Watchdog, which I'm very active in, and I'll be that was just announced in October, so just a little more than a month ago. But I'm going to be very active with that going forward.
What do you think about this? Did you imagine, say, 20 years ago that we'd have zero commissions? I know, the internet was the beginning of the Baton Death March of that end of the industry, and that it would all be about collecting assets and just charging 1% or something like that for it to be managed.
Yeah, it doesn't surprise me much. I was there at the beginning of the move toward wrap accounts and what later became robo-advisors. When I first started as a stockbroker, when I was 19 years old, it was
Wow.
1992. So
you didn't have to be 21 to get the Series 7?
No, not back then you didn't. I
Okay.
don't know if you do now, but I got my Series 7 when I was 19, and there was still brokers then. It was kind of the dying breed of classic stockbrokers, and they would build a position and they'd make a bunch of money on the buy and a bunch of money on the sell. And hopefully it goes up so that when you make the money on the sell, you put them into something else. And that was kind of the business model for these folks.
Right. Converting customer capital into commissions.
Right. And then it was changing to wrap accounts. And I was part of that. I was early because a lot of people, I went to a lot of seminars and things where a lot of the wise members of the industry said, hey, kid, this is the future. Don't bother with stocks, do assets and get wrap accounts and manage money for a fee. That's going to be the wave of the future. And so that's how I built my business very, very early. I was really early in that, one of just, a handful of people that were focusing on wrap accounts back in the early 90s there. And now it's the whole industry.
Okay. So, you've seen the whole development of the industry, and I come from days of open outcry. That's when I learned on the floor, when the trading floors were not bowling alleys. They were communities of barracudas trying to take a piece out of one another. So tell us about your conversion to crypto, and it looks like it's one that has stuck with you and that your conviction has built. And tell us how it happened.
Yeah, well, I've always been interested in new technologies and new markets and new kind of things. I've always been interested in sort of what's next. I was interested in computers when I was a little kid during the PC boom. I followed Microsoft when I was a little kid. When it was in its early days, I was fascinated by software and, fascinated in emerging markets as well. China, early in my career, everybody was talking about how China is going to become a major economy. And a lot of people laughed at them. They said, no way, they're communists. They're never going to be a major economy. But I was interested in that. I was interested in the Middle East later on. But my interest in crypto combined a lot of these things that I'd been interested in: capital markets, money, how finance works, how the world works, technology, something new, also political a little bit. I have, I'm interested in politics. I'm interested in freedom. I'm interested in some of the more, less conventional political ideas like libertarianism, anarchy, free markets, Austrian economics, how these things work. And Bitcoin is a convergence of all of these things. It's technology, it's something new, it's got a political aspect, it's got kind of a interesting, weird, edgy sort of aspect, not being part of mainstream. And so that was what originally got me interested in it. I was very skeptical also. I originally bought just a tiny bit as a speculator because I was very cautious. But after some time and learning it, Bitcoin is complex. You sort of need to know about a lot of different things, and nobody has all those knowledge sets. You got to know a little bit about law, a little bit about economics, a little bit about markets, a little bit about computer science.
Yeah, so it's not for the lazy to really wrap their head around what it is, unless they're just buying a chart or taking a shot. So you were skeptical, and we're all skeptical until we learn about something. Right? And then either our skepticism is validated or we convert and believe in something new. So, how long did it take for you to really think you had your, head wrapped around it, understood it, could present it? Because I see you have a great resource on your website for people that really want to delve into it. You probably went through every step that you have on your site, right? All these white papers and your resources here, I think, for anyone that's interested in learning about crypto. You have it all here, Bruce. Can you see the screen?
Yeah. I used some of that from other folks who've been kind enough to accumulate a lot of this stuff. Jameson Lopp is one of the greatest resources. I think probably half those links are things he recommended. But I would say probably 6 months into it, something clicked with me. And that was the realization that this is a new invention. It's not just a thing. It's not just a token. It's not just a coin that trades, that people speculate like a penny stock. It's actually a new invention that does new things that could not be done before. And then the question became how significant is that invention and what can it do? And that I still believe. Now, in this journey you mentioned, it's interesting because there's other things that make me more skeptical. Even though I've been in Bitcoin a long time, I'm
bring up penny stocks. I see a lot of these kind of what they call these altcoins that look exactly like how an IR firm used to pump and dump bulletin board, pink sheet stocks, where you go out and now they probably give people coins Do you get restricted where, you know, if you fulfill an obligation, you get coins for your action, the way penny stockbroker owners, their currency was their stock, and they give people free trading stock to bring in volume. Is that
Right.
what's happening in the altcoin arena?
Yeah, very similar. It's not even as regulated, so they don't tend to have restricted shares. The ICO wave of 2017 and these altcoins, many of them, not all of them, but 90+%. The model is they raise some money, they keep a bunch for themselves, so they'll come out with 100 million worth of tokens, raise 10 million, so now they have 90 million, and to get that 10 million trading, you know, they want to have $1 billion market cap. So they give that to key advisors who are people they feel who can help in one way or another, either by using their name or by pushing it directly. And then they sell it. They sell it to institutions and to individuals, mostly retail investors. And most of those are very, very low quality. Some of them were outright scams, but most of them were very low quality offerings.
It's the same game, different title on the instrument.
Yeah.
Same game. All right. So you're talking about during your journey, what the fact that it's an invention. Maybe that's why it's difficult for John Q. Public to get it, because, you know, we all know how to turn a light on, but we don't know what went into, you know, the AC and the DC currents and how they all happened. So do you know who the inventor was?
No, no one knows for sure. There's a person who claims to be the inventor. There's been a couple people who claimed it. I think there's 5 people claiming to be the inventor.
Al Gore invented the internet. Maybe he invented crypto too. You think so?
Exactly.
All right.
Nobody has given any concrete proof yet.
All right. Okay. So let me ask you this. You feel, do you keep your personal holdings in a wallet, or are there any exchanges out there that you trust? They're all unregulated, aren't they? So how do you go about telling someone that wants to at least get involved in some way to go about their purchases on an exchange? Or
yeah, I'm a little different than a lot of old-time Bitcoiners. Most of the people in the community for a long time are very much of this belief, you know, not your keys, not your coins. And a lot of them are against exchanges. But me coming from the traditional world, I actually see a lot of benefits in custody and custodians. You certainly have the risk that the custodian can go out of business or get hacked or steal your funds. But I think there's a lot of risk of that yourself as well. You could get robbed. When crypto's gone, it's gone. If somebody steals it from you, you're not going to get it back. So I see quite a bit of risks of self-custody, particularly if somebody is an investment advisor or if somebody is a high net worth person. You know, I have friends that have carried around, you know, $10 million plus in cryptocurrency on a little USB drive. And I just think, coming from the traditional financial world, I just think that's just too risky for my tastes. And so I'm actually in the minority in that I recommend custodians. I think it's okay to have your own custody. Now, if you have a lot of money and you're very technically sophisticated and you can do things like you know, redundant backups and very secure, you know, if you were to put, say, you know, what's called a cold storage solution, like a hardware wallet or a paper wallet or something physical that can't be hacked, and you put that in 2 different safe deposit boxes, you know, that's pretty good. You know, that's a pretty good.
Can you get on an airplane with that?
Yeah.
Amount of crypto in your pocket. So does that go through a metal detector? So that could be an attraction, since you could only leave the country with 10K, right? So you could travel with millions.
Yeah, I think that it's considered a password, just like you can get on a bank, you can get on a plane to another country and have a password to your Bank of America account. And maybe your Bank of America account has $10 million in it. So I think it's considered a password. It's not an area of law that anybody has pursued to say, hey, if you're crossing the border with these crypto keys, because a lot of people do that. I mean, there's a lot of people who you know, keep custody of their own keys, and some of them have ways of getting that even when they're traveling on their, you know, they hopefully don't keep it right on their phone, but they maybe can get it through their phone, between their phone and another device plus a password, something like that.
Yeah, I don't even think Orwell could have dreamed this up. So, are you price sensitive at all, Bruce? I mean, we have dramatic swings in the market. Like a lot of gold guys will say, don't wait to buy gold and wait. Does that apply to you? Uh, you know, uh, should you wait for good prices to buy, and is it ever the right time to sell? What's your view on that?
Yeah, I view it as sort of a binary play. Either this thing will work or it won't work. And if it does
Okay.
work, it has a chance of transforming global finance and the way that capital markets work. And it could be, in the case of Bitcoin, it could be a major global currency. So if it works, it works. If it doesn't, then it really would have truly been a tulip bubble, the likes of which the world has never seen. And then you see a very low price. So I'm not big on a lot of technical analysis or day-to-day timing it. I think if you believe in it, you take a small piece of money that you can afford to lose because it is very volatile, especially in fiat, and you take it and you sort of have a long-term threshold on it and think about what those prices are. I'm somewhat price sensitive. Part of my price sensitivity goes to this thesis. Is it going to work or not? And technical analysis is a real thing. I mean, if you have something that just crashes so badly that everybody is underwater for a long, long time, that's definitely not good. And it may be harder to break, or definitely would be harder to break out of that. It may not break out. So,
Okay.
the answer is I don't try to time the market going in or out, but rather have a long-term philosophy of, do you believe in this technology? Will it work? And then what does it take to get there, kind of thing.
Look at that. How old were you in this picture, buddy?
Yeah,
Huh?
I must have been 20 something in that one.
Okay. Did you have a girlfriend?
I think I was married to my wife that I'm still married to. Yeah.
Oh, congratulations. You're blessed too. So,
Thank you.
what I would like to know is, I mean, it's a nice website and, it shows you've been everywhere, CNN, CNBC, everywhere. What are you trying to accomplish by having this website? Is it just a way of paying it forward and making people aware of crypto? Are there funds that you manage? Do you have a business model for this? Or you just like to be an advocate and an ambassador for cryptocurrency, and that's why you're doing this?
Yeah, sort of. So I set out in the business to learn as much as I could and meet as many people as I could. And I think I did pretty well at that. And then I invested, and my main operating business is called Chainstone Labs. And what that does is basically serves as an incubator and an investment company to sort of further my ideas in the space. So I've invested through that company in, various startups and other ventures in the industry, companies like Shapeshift, which is a really cool kind of a almost decentralized exchange kind of thing, and Abra, which is very interesting because it uses some very advanced technology to kind of have derivatives of equities. And I've invested in a few other companies, and then Chainstone
So,
also
would you call
runs,
yourself an angel investor, Bruce, or a
yeah,
venture
a little bit.
capitalist?
I've
Or
definitely been an angel. Yeah. I think the company is more of an incubator, but yeah, I think
okay,
I've been an angel. Not really a formal angel, but more of an
okay,
informal angel and more
okay.
strategic investor. And then the company hosts an event called the Satoshi Roundtable, which is one of the most successful events in the space. It gets very good attendees. We've had Ron Paul, and this year William Shatner's coming, and it's a small group of top CEOs in the industry, a lot of developers and CEOs. And then we also own Watchdog Capital, which is a fully SEC registered broker dealer that we're planning on using to pursue this area of technology. Our belief is that
Go ahead.
is that a lot of things are going to become tokenized. A lot of securities are going to become tokenized, and that's why we set up this broker dealer.
Well, I'll tell you, Bruce, it was a pleasure meeting you, and I recommend people, bookmark something like this. So, Bruce, you're really not selling anything to anybody right here. You have a fund people could get involved in, or what?
Not really. No.
Okay.
Watchdog, we will be accepting clients in the near future.
Okay.
But yeah, we're Watchdog is our main business that could accept, investments, and that's still pretty early stage. Like I say, it was just announced in March. So we're trying to do, even though I was in the industry a long time, we're trying to do things very carefully, very deliberatively, especially because it's such an area of new regulatory interest. So I've been even though I've been very active in crypto for the last 6 years, I haven't actually really offered a product to anybody all that time. A lot of it has been building and planning, and we're now ready with Watchdog and some of these kind of things. We're very close, but I think it's very key because it is so regulated. Coming from my regulated background, I recognize that it's something you want to be very, very careful and do things right. There's a lot of people who got into trouble by taking shortcuts, and we're trying to do things very carefully.
Okay, and Spacesuit X is an acronym that Bruce has come up with. You could watch his presentation that he did, and it's a way for individuals to do their due diligence on any crypto that they buy. And you'll have to put some more work and elbow grease into it. But Bruce, it was really a pleasure meeting you. A great resource for crypto. I hope you have a great holiday season, and 2020 is a breakout year for everything you do.
You too. Well, thank you very much. It was great to be here.
All right, everyone, Bruce Fenton, and you could follow him on Twitter at Bruce Fenton, and there's his website, brucefenton.com. Everyone have a great Fed day. What's the Fed going to do today, Bruce? You don't care.
They're going to mess with your money more, just like they've been for a long time. That's why you get into Bitcoin. Code will make your decision. In Bitcoin, code makes the decision, not some people in a fancy marble office.
All right. Well, I tell you what, don't just count your crypto, count your blessings, and we'll see everyone tomorrow. Good hunting. Adios. Thanks again, Bruce. No, I'm not going to ask about John McAfee. Interviewed him. I know all about him. Take it easy, guys.